Okay, folks, NVIDIA reports earnings, and let's talk about how they were. It's a mixed story. A couple of articles, one off of StockTwits. I shouldn't say article off of StockTwits. I'm not sure where they're getting their data from. But you have, I guess it is published by StockTwits, and they have EPS of 81 cents beating expectations by 75. I don't know where the 75 cents came from, because off of CNBC, they have earnings per share 96 cents adjusted. This is important, adjusted. 96 cents adjusted versus 93 cents estimated. Okay. Then, so again, 96 cents versus 93 cents. Here, 81 cents. I don't know if that's adjusted versus expectations of 75 cents. Okay, let's get rid of those. Then we go to, I believe this report is off of Benzinga. Here, I believe this is Benzinga. NVIDIA Q1 adjusted EPS of 81 cents. That's in line with StockTwits. Misses 88 cents. I don't know where they got 75 cents off of StockTwits and 93 cents off of CNBC. I don't think there's any argument here that EPS beat. So what's the reaction by the market? I would say that by and large, it's in line with the market makers' expectations. What does that mean? What it means is that, and by the way, the conference call just got started a minute ago. You're seeing the shares rise here. I'm going to give you a reason in a moment why that may be a little bit premature. So let's go to the anticipated market maker move. And they expected a move of about $8.60 per share. We closed at 134.81, and we're now up at 142.36. So in line with the market makers' expectations. So option sellers, they're doing well. Options buyers are being annihilated right now due to the fact that you had an IV rank. Whoa, it was only 29%. They didn't even bid up the options into earnings. This is the lowest I've ever seen an IV rank on a major tech stock going into an earnings report. There was no premium here. There was no implied volatility, I should say. So forget about IV crush. I doubt there were a lot of option sellers in here at this price. I wouldn't have sold options. Option buyers, they may do well because the options aren't overly inflated. So why do I think that the put sellers may be better off? Here's why. Let's go back to the news. And the news on a forward-looking basis. Let's just get one thing out of the way, okay? Great earnings report. Bravo. Great stuff. All right, for all the bulls out there, I'm not going to argue. Very good earnings report. Huge growth, data center demand. No argument there. Let's move past it. Let's talk about the future. The future here, their guidance for Q2 revenue of $45 billion plus or minus 2%. Here's the rub. Versus FactSet, analyst consensus of $45.9 billion. So they guided below the FactSet expectation with a plus or minus variance of 2%. That is indecision. And they blame it on outlook reflects the loss of H20. That's that super chip over. They banned selling over to China. It needs a license to be sold over there. Revenue of $8 billion due to export control limits. That is the limit on that chip, the H20 chip. So when I am confronted with a situation like this, where one would think that this news, you've seen some action take place here, and we're only on a 1 minute chart. Let's pull back off of a 1 minute chart while I speak. Okay, there's the after hours price action. So on a 5 minute view. So in a situation like this, the stock could do anything tomorrow. Okay, it could go up, it could go down, it could go sideways. I wouldn't be the least bit surprised what it does. Okay, it's not my job really to identify how this stock is going to trade after hours and how it might open tomorrow morning. Right now, it's up. Therefore, the probability of opening up tomorrow is good. The probability of how it closes, I have no idea. Odds favor bulls, but you have no idea. So what do we do in this situation? How do we want to trade NVIDIA if we want to trade NVIDIA? It's simple. If the news is priced in, one would think that the valuations would reflect such pricing in. So let's get curious. Let's talk about the valuation. Now, the PE multiple, 10-year time frame, is 35% below the PE multiple. So clearly, the shares are not as pricey as they once had been. The however is that the price to book on a 10-year average is off of its highs as well, but still up there. It's pretty frothy. NVIDIA's price to book is 45% higher than its 5-year quarterly average of 28.9, but 12% below than its last 4 quarters average of 47.3. So hardly a value on a price to book basis. Now, taking a look at what I believe to be more important, price to sale. Price to sales is, again, off of its highs, but still not at a discount level. So does it look as though the news of the H20 chip is built into the stock? It's locked and loaded, ready to go up higher because the bad news was already out there and now it's been reported by the news event? Maybe there's room to go to the upside before you say, you know what, this stinks, nosebleed levels. But by no stretch of the imagination am I saying that by any metric, by all metrics, that the stock is cheap on a relative basis and should move up higher despite the H20 news. NVIDIA's price to sales is 11% above its 5-year quarterly average of 22.9, but below. 10% below its last 4 quarters of 28.4. It's not cheap by any stretch, but it's not nosebleed levels expensive. Now, looking at it from a technical perspective, this is a daily chart adjusted for, this is trading after hours at current, reflective of the after hours price action, looking pretty good. I can make the argument here that we're heading up here to 150 per share. How do I know that? Automated trend lines. Click of a button. So it looks as though if we do open up higher, hold tomorrow's gains, that's where we're heading. Now, let's take the trend lines off, 4-hour view, and let's take a look at it from a 4-hour view. We had broken out back here on the 14th, retraced back down, and now we're getting follow through. It looks as though we are moving up higher into tomorrow. Now, with the Fibonacci retracement levels, this is a feature I don't talk about much, but again, click of a button. We are at the top of a Fibonacci range. So just something to keep an eye on. That's a 4-hour time frame. It should carry over to the daily chart as well. Yeah, we're right there at the top of the Fibonacci range. So something to keep an eye on out for NVIDIA. Would I buy the opening rally tomorrow morning? Not with my worst enemy's money. No way. I would rather see how we close out the day. Look for a retrace back down to perhaps this Fibonacci retracement level if in fact we close above it tomorrow, and then perhaps entertain a long position. Now, moving on to our closing charts, let's begin really with the FedWatch tool. We had the Fed minutes that came out today, and we were above 60 on a September move last night. That dropped down back down below 60. October was above 80 last night. We're back down below 80. So if anything, the probability of an ease has come in a little bit from yesterday. Bullish percent index, no new daily lower low or weekly lower low. High yield debt pulled back a little bit today. This is a weekly chart. I could tell it's pulled back a little bit off the highs of the week. Not much going on here